Welcome to Trading Lounge and the US indices for Friday, August the 5th, and starting with the S&P here. Now, as I've been mentioning, it's possible to have from the top here an A and a B and a C wave here and have it completed, and we can just continue to move higher in that case. Now, there's a good case for that. There's also a good case for an A and a B and a C for a B wave here. So I'm playing both of them out, or just keeping an eye on both of them. And at certain points in the trend up here, I point out that where we can have short-term tops or a possible corrective move down through to here and so on. And we've been tracking this little move to the upside here, as you know, and we've looked at this little correction here. So we've been working this week in this little move up here. So when this move up here is completed, then we're going to have a correction. The question is do we have a correction that just comes back to, say, from 4.2 roughly back to 4.1 and then push up again? Or do we have a larger move down at that point? So I don't know the answer, but what we do need to do is just work through it. And yeah, that's all I can do with all of this. Now, the other question is this count to the upside? Is that correct? Well, probably not. But there are stocks like NVIDIA and Apple that could support this count. There's the DAX that could also support this count quite clearly. So there is a case for it. We could count it up as a WXY as well, which we'll have a look at perhaps with the Russell. I think that fits quite nicely as a WX and then an ABC pattern here as well to finish that off. It doesn't really matter. Whatever happens at this point when this finishes here, there's going to be a correction. It's just a question of how big it's going to be. Is it back to 4.1 and up, or is it back down again? So the first leg back down, we'll need to look at it as either being 3 waves or 5 waves. Once we understand that, well, then we can take our next step. Okay, so on an intraday basis, we're going to solve the problem through the intraday basis, just going step by step through it all. Rightio. So yeah, that's it really. So let's have a look, start to go to the intraday. The bullish case would simply be just looking at the market as we have been doing here, as wave 1 here and ABC for 2 here, up for 1 here, back for 2 here, and then just keep building a case. Now, if that's going to be the case, we're going to go to 4.2 roughly, and we'll check all this out in detail anyway, and then push up from that point. So, but basically, yeah, we just keep sort of working that. I think there's something on the 5K tick. I'm not sure what that is at this point. Okay, this is just this one here. So this is the count that we're working at the moment with 1 ABC for 2 here. Like I said, you can have this as a WXY as well, but 1 and 2 and 3 and 4. I mean, there's overlap there. So, you know, unless you want to look at it as some sort of leading sort of thing, leading wave 1 to the upside or something. But all I know is that we counted this as a corrective move, got the low, traded up for wave 1 and 2, traded up into wave 3 here. We've got this is all 3rd wave stuff, this is 4th wave. So this low on the 2nd of August here, I could count this as a triangle pattern, putting this here and this here with an A, B, C, D, and E here, and then having a top sitting on there. So any move lower than that low there, then we're coming down at that point, okay? I don't think that's the case, because in the stock market, we're looking at this as wave 1 here, and it finishes in an ABC here as well. So, but still that would work with the triangle as well. But so we're pushing up here, but just to let you know, if this low gets breached, then there's a good chance, well, there's actually a chance for it to come down as the C wave and then a move up. So watch that 5 waves down and then go short under that. But we'll talk about that in a little bit more detail. This little area we'll weave in there. So like I mentioned, in the bullish count, once this top is in place as 1, 2, 3, 4, 5 here, then we could come down in 3 waves to here and then go up again at that point. If we come down in 5 waves here, well, then we're going to be coming down in another 5, and we'll probably need to look at that as the A wave at that point, and then a B wave over here and a C wave here, yada yada yada. So yeah, we'll be on that side of the fence. yeah, so let's just go into, I don't think there's much on the 1000. I'll just go to the 100 and look at that space that in this top area here. Is 10 enough? Yeah. So we've got 1, 2, 3 and 4 here, and then 1 and 2, possibly 4 here. If 4 is here with an A, B, C, D and E here, then we have a top in play over here for that. Okay, but otherwise I think this is the case here, so I'll probably just dull that out there just to make it less dominant in that particular count, because most counts when we look at stocks, and that's the reason I look at stocks, is to get some sort of better idea of the indices. But 1 and 2 here, and 3 and 4. Now we've also got this, it's more likely that wave 4 is sitting here with this ABC pattern here. But it's not counting that well up here as an impulse wave. It still can, because it hasn't breached any of the lows here, just doing it simply, you know, without going into the count. But if this was an A wave, a B wave and a C wave down here with 1, 2, 3, 4, 5, you'd have to allow that to play out, and then once it's got 5 waves down, then you could put a green signal trigger under it, or look for the B wave on the retest of 4150 and then look to short at that point. So that's where that would be, how it would play out. This long trade that we've got here, we just put the stop here, and the idea would be to move up here. Now obviously to take profit on this here, anywhere above that high there would suffice. So then you need to understand between between 100 and 200 we got the Fibonacci sequence of numbers, which we can play out as, you know, the sequence 1, 2, 3 is group 1, and then the midpoint 50, and then 8. When we talk about 8, we talk about group 2, which is 65, roughly speaking, 65 and 72 in here somewhere. And then we just give that a bit of splash of color as more of as a visual aid of design more than anything else, just to give it a bit of clarity in that area. Now the thing is that if the market can find support in group 2 here, which it couldn't over here, just trading above it's not support. You know, support is something that you need a classic trading levels pattern, the arrival, the reaction, the first high above the level. That's not support. You need it tested. You need that number tested and then built upon that number. So if you get that, it didn't occur here and didn't occur here. So if it doesn't occur, it still belongs to this number, the 50. If it finds support on 65, then you've got a good chance of climbing up through here and getting up to the next level at that point. The accumulation process across here, the distance of that, sort of Richard Wyckoff Gans speak talk, then we should be able to get to the 200. The other point here too is that our concept of the bullish weekly cycle, which having Thursday as the bear day, Wednesday is swing day, Wednesday is like a V day, Thursday is like a bear day, and Friday and Monday are the bullish days. If I don't get Friday as a bullish day, then I know I've got a change in trend. Okay, but if we do get a bullish day on the Friday and it closes reasonably firm, then you expect Monday to follow through as well. Okay, and that's the sentiment that you need to run with. So while the market is above the 4150, you could look at what do we got here now? So we talked about going long here. Now we can talk about this next leg that's come down here. That's at the 61.8% there, right? So that's where that rally would be at that particular point. So we could drop that down to here. Or a better way to do that is look at the when you find a top, look at the closest largest number here. In this case, it's 41.55, and then look for a classic trading levels pattern on that level. And then that will save you getting triggered in unnecessarily. You know, that's the best way to look at that. So you put the 155 here, and you can see that it's important now that you put the line in, because you don't see much until you put a line in. Then you'd still need that arrival, reaction. Well, basically, it was just use this one. The arrival, the reaction, the first high above the level, and ABC, the second high above the level. So you go long above here, then you can bring it down to this one. In this case, it didn't get triggered, but that's what you're looking for over here, the first high above the level, the ABC pattern here, and then just intraday trading kind of setups. And then you can put that over here, and it's just another layer of security to keep you safe and to get your entry, and also to put your stop under here. Once that's triggered here, then the stop could go under here, so you'll know your risk reward at that point. So I'll leave you with that point there, and I just want to have a look at the few things around the block while we're here. So that's the US 100 there. So I want to have a look at the SPX. I just want to have a look at the volume. So the volume overnight, we had increasing volume here over this bar, which is good. And then this one here, it closed lower, but it closed lower on lower volume. So that means the sellers haven't got control of it at this point. So that's good. If this had more, if that closing was lower and this volume bar was higher than that one, right? If that was high, if this one was higher than that one, then the sellers would be in control. So a corrective pattern is always on lower volume. So that's on lower volume. So that's good. That's a bullish signal at that point. And the other thing, this consolidation over here, I've got 4-2 here, but this is where group 2 will come in. We've just talked about group 2 at between 41 and 42. We looked at all the little, these are minor levels, 41 and 42. And then we looked at the sub levels in there. So that 48, the 8 in here, that 41, well, higher than that, this here. So 41.65, 41.7. This group 2 here, this rejection here is basically from this over here for that. This is all of that here doing that. So that's where that's coming from, market memory stuff. So yeah, that's all good. I mean, one of the other things here that's quite interesting really is that this move here, if we labeled that as an A and a B wave here, this wave 4 here overlaps, you know, we've got this as 1, 2, 3, 4, 5. I mean, I don't feel good about that, but because this overlaps over here for that. So this would really be better if it was placed as 1 and 2 here, and then the third wave here, and then the fourth wave here, and then the fifth wave here. That would play out better like that, and then an ABC, and then up at that point. That's how that would play out better at that point. But what I wanted to have a look at is the SPY will be much the same. So yeah, just checking volumes here. And one of the interesting things, see this particular pattern here, one of the other reasons I think it's corrective with the banks in the banking sector. If I've got the banking sector over here somewhere, you see how the banking sector, most of the markets had lows on this June 17th over here, right? But the banking sector had this low over here. They had this weird ABC pattern here, right? Making an extra low over here. Everything else had lows here and worked its way up. But this pattern here has done that. So it's making the whole move up here corrective. It's one of the reasons that I'm thinking things are corrective. So this move was lower here. But we get to see that on the New York Compositive here as well. You see how it's lower here? And there's other markets that have got this here as well. So that's one of the reasons I'm looking at the whole thing being up here as being, you know, part of a corrective wave rather than being bullish. But like I've always said, there's good cases for both sides of all of this, you know. This is the options here, the S&P options index. It's much the same as well. Everything's going according to plan. The S&P low volatility stock here, market here, it's got a very clear, from the top here, it's got a very clear 1, 2, 3, 4, 5 for the A wave, B wave and C wave here for this. So yeah, so we've got this as the A wave here. It could go straight up from that point there as well, but we've just been using this here as an A and a B and a C wave here, and you can see here that there's the beginning of the trend here and the middle of the trend, and then we're into the end of the trend here. So we've been waiting all week. We've been working with this fourth wave here. It wasn't there when we started. It was like there, but we could see that the strong move up here. Then we could see this shorter bar there, and then obviously that's weakness, and then that weakness came in. So we're seeing that on low volume, so that's the fourth wave here. So we still need to see that push up here. But I was thinking with this one here too, it's kind of like lagging a little bit. It needs it actually needs two little moves to the upside at this point. When you count this up here on the 15-minute chart, we've been looking at this all week, so we'll just go and have a bit of a look at it again. So so 1 and 2 here, so 1 over to here, 2 here, we pull that apart, and then we've had 5 waves up here. I won't go into that. 1 and 2, nice strong third wave here, the fourth wave that we're looking at. So we don't have a clear fifth wave above this move here yet for this. So we're still looking for that move above this high here. We don't have that, and even when we do get that, that will just be wave 3 here. We'll still need wave 4 and wave 5 here. So this is a case for still further upside to come, you know. So anyway, that's sort of where we are with all of this. So I think just to recap the S&P before we move on here, we have to be careful that there's not a top in here already. I don't think that's the case looking around, but if it is, then you have to wait for the next 5 waves to come down and then put the short trade trigger under that, and you can short the back of that. But otherwise, we should be pushing up. If you're going to push up, we want to be taking profit above that high here somewhere. So you could probably take it at 4.2, but taking some of it off here and some of it off up here. If you want to re-enter, you can re-enter at this particular point here. This doesn't count very nicely as an impulse wave to the upside, but it hasn't broken any rules either because all the lows are still intact. Being low here, so we don't have any overlapping wave structures. They could all be 1s and 2s, but it also could be a B wave as an A and a B and a C, so you'll need to take care. And really it's just a matter of seeing Friday. If you see Friday strong, you need to surf that. You need to jump on that and head down the pub with everyone else, you know. So yeah, that's the S&P. The NASDAQ, just keeping things short. Wave 3, wave 4, wave 1, wave 2. We've been tracking 1, 2, 3, 4, 5 up here for the third wave. We've got the fourth wave pulled back here, and this is in better shape than the S&P. So we'll look at this as 1 and 2 and 1 and 2 here. We could also look at this as 1 and 2 and 3 and 4 and 5 moving up for the third wave, the fourth wave, the fifth wave for the third, the fourth and the fifth. So somewhere up here for all of that. That low's got to stay in place, otherwise we've started the larger correction at that point. The Russell here, we can look at it as an A wave, a B wave and a C wave and have a low in place and continue all the way up here. Otherwise, we need to look at this the same as the other markets. We can look at it topping out here somewhere, having a corrective move here. This needs to be confirmed. Don't take it, just take it with a pinch of salt. Then a move up to this point here. You know, you might think that this is all still wave 1 here or something, and an A, B, C for wave 2 will be coming down from that point. That's just not the case, because when you look at stocks like NVIDIA, for example, as an example, I think we can go to the daily chart here just to make things clear. So NVIDIA here's got 1, 2, 3, 4, 5 here. So if that's got 5 waves here, then there'll be a correction and then there'll be another 5 up. So it's that sort of thing here. So that won't be the case. There will be resistance here, because from that top to that low, that's the 50-60% retracement level area there for that. You can count this down differently as well. You can count it down as 5 waves down. You can also count it down correctively as well. So we're going to look at 10K and 5K for the 2 big accounts, then we'll go to the 100 tick. So 10K, I can't remember what this one is. Need more data. So this one here, you could count it down like this. I haven't really had time to ponder my navel on this one, but an ABC for the W, an X, an ABC here for the Y, so a WXY for the W, and then coming over here, looking at it like it's valid, you know, as a WXY Y here, so for a larger W, so an A and a B in here. Doesn't make any difference. It still leaves us exactly where we're going to be anyway. We're looking at this 1, 2, 3, 4, 5 up here, and for a W, then an ABC for this W, for this X wave here, then going up for a Y with an X up there, and then coming down for 3 waves here for that. So that's another way to count it on the 5-tick chart here. You can count it down as 1, 2, 3, 4, 1, 2, 3, 4, 5, 4, 1, ABC for 2, and then 3, 4, and 5. There is a bit of an overlap here for that. That's the issue with that. Once again, we're counting this as 1, 2, 3, 4, 5 here. Probably not right, but we still just haven't updated this for a while, but we just need to take us into that particular space here for that. So we're looking at 1, 2, 3, 4, 5 to finish off in here, and now we'll go to the 100 ticks to have a look at this particular area in here for that. And from that wave 4 here, that it's basically the 2nd or 3rd of August, this low here on the stock market and on stocks. So this is what we're tracking, and then looking at this as 1 and 2 here, and then 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, and pushing up for the 5th wave. There is overlap here, so it's possible to have a top in here already for this. If you're long here, you'll need to, I mean, you can put it here. That would be the safer place, I guess. Yeah, it's looking all okay. Could you get 5 waves out of that? Yeah, you could get 5 waves of 1 and 2 here, and 3 and 4, bit of overlap here, and then 1, 2, 3, 4, 5, bit of overlap here. Just not really displaying a nice impulse wave here for that. If this becomes, because to get the stop closer, if the market came down, it's going to bounce off that, which it did previously over here, but the second time around, it won't bounce as high. So then it comes down here, wait for that first low below the level, and then put your stop under that. Okay, don't just get stopped out for the sake of it. Wait for that low to come in and retest back up at that point. That's just refining it a little bit further. Tops of markets they don't always finish in a nice, pretty easy picture. They get dragged around. They could get dragged around from the US dollar, So anything could occur coming into this top here. So the idea is just to trade less. We're not at the beginning of a trend. We're at the end of a trend within this particular cycle of degree of cycle. So less is more. So reduce. I know that's a little bit sort of boring for folks. If you've been trading 20 contracts and you have to drop down to 5 contracts, it's like, I'd rather go have a beer instead. You know what I mean? So yeah, steady she goes. And also, we don't want that. It's just the last video we uploaded. So the Dow Jones, the same as well. So bit of an odd count here, but just it's working okay as 1, 2, 3, 4 here. The beginning of August low here. And it's kind of moved up quite nicely here, actually, out of all of them, I have to say. So probably 1, 2, 3, 4, and 5 here for this. But you could look at this as an ABC here as well. It's hard to get 5 waves out of here. I mean, you can go 1, 2, 3, 4, 5 here, but then you've got overlap here. But we've got to be careful. And we may just get a C wave down here to start off with, and then a move up here. So that's why you have to wait for that 5 waves there. This move here between 32 and 33, the minor levels here, the most important number, the second strongest number in the market is 5. So that 5 there, that's the one. So if that becomes the retested resistance, then you know that you're coming down further at that point. Otherwise, you could just move up from that point. You just have to see what the Asian markets do. But being Friday, we should see them push up. If they don't push up, the Asian markets, if Asian markets don't push up, then you know that something's wrong for the Friday. And then we can have tops in play. But that's about it, really. Yeah, alrighty. Thanks for tuning in and enjoy the weekend. Cheers.